Hey guys, Ryan Dement, True Podcast. Hope you guys are having a great day. We got a new microphone, we got a new background, and we got a condenser. So we're going to sound hot and we're going to come out strong. I know this is a second episode of the week, but I wanted to put something out there this week. Yesterday or late Thursday, the key points of the pending home sale drop in June of 2021 came out. And the headline from CNBC is pending home sales drop in June, more evidence of a housing turnaround. So their key points: signed contracts on existing homes fell in June. Prices in May were up nearly 17% compared to May 2020, according to the latest reading of the S&P Case-Shiller report, which I shared in my last podcast. Remember, it's an index of 20 cities. Then it has a focus on the 10 largest populous cities. And all of those cities were through the roof when it comes to house affordability and the shrinkage of housing inventory. So they're saying it's a housing turnaround. I'm trying to get at what they're getting at. And one of the things that's horrible English. I don't know how this can be a turnaround. I can see where they have about 3/4 of the way down the article, and I'll put the article in the show notes. Prices are high because inventory has been so low, but that is starting to change. The number of newly listed homes in June rose 5.5% compared to June 2020, according to Realtor.com. So when I go onto Realtor.com and I start looking for more information, they say the same thing, 5.5%. Okay, what does that tell me? I need more data, guys. Hello? 5.5%. 5.5% of what? That's what I really want to know. What's the total number? And then a little bit further down, they're saying regionally, pending sales increased 0.5% in June compared with May, and were up 8.7% from a year ago. In the Midwest, sales rose 0.6 monthly, but fell 2.4% annually. And then the home builder, D.R. Horton, came on and put out a statement. We've slowed our home sales to more closely align to our current production levels while building out the infrastructure needed to support a higher level of home starts. Well, let me tell you guys something. I'll read between the lines. I'll give you guys the dirt. That basically means they're slowing it down because they know they potentially could have standing inventory, which is happening here in Phoenix, especially at the higher end. Toll Brothers in my housing development, hello, advertises every week for standing inventory. No questions asked. And oh, by the way, it's Friday, July 30th. And right now, lumber futures for September are $602.20 as I record this, which is down $20, down $19.70, which is 3.17%. They've been kind of flat all day, but the last several days we've been up. We've reached about $640, and now we're down to about $602. It just came back to $602, and we're gonna have a bounce, guys. Just be prepared. September is a big demand for lumber, and I'll be sharing that in my next podcast. And the rest of the CNBC article is, it's not even worthwhile talking about. So let's go on to the next. Key inflation. This is also from CNBC, came out today. Their key points: an inflation gauge followed closely by the Federal Reserve increased 3.5% year over year in June, slightly below the 3.6% estimate. Consumer spending rose 1% faster than expected as personal income also increased, which they said personal income increased 0.10. I know my income didn't change. How about yours? I wanted to get down to this, and I'm going to get some more data. This is just a quick read. It says the core PCE index rose 0.4 month over month, which was below zero point 0.6 Dow Jones estimate, indicating that the inflationary pressures may be starting to ebb at least a bit. But the piece that I want to share, let me find it. Sorry guys, this is off the cuff. English. The personal consumption expenditures, which is the PCE, they're saying which excludes food and energy, was expected to rise 3.6. So food and energy is our gas and our food that we put on our table. Anything else that you have to pay for, electricity, anything that's in energy, it's excluded. So how much are you spending on a monthly basis? I know here in Arizona, it's summertime. I just got my bill for July, and it was over $200. And that's pretty standard here. I am going to go to solar, but that's something that's pretty standard here. I can't do anything about it. But the thing that bothers me is they're very vague with this inflation gauge that's followed closely by the Federal Reserve, increased 3.5 year over year. I'm trying to dig into that. I'll have more information on it on next Wednesday's podcast. I just wanted to get this out there and talk about this. And then last but not least, guys, lumber prices. I know I touched on it earlier. The Wall Street Journal put out a post today about record lumber prices delivers sawmills a windfall. You know, at the top of the market, we were at 1711.20 for lumber. Per board foot, per 1,000 board foot. Well, today we're at $620, 620 cents. But this is now saying that the average price across the South for pine logs rose 3% during the quarter to $25.41 a ton, which is about what it was a decade ago at the depths of the housing crash, according to Timber Smart South, a pricing service affiliated with the University of Georgia's Forestry School. Sawmill companies are spending the windfalls to further consolidate and boost output, particularly in the South, where they have flocked for the cheap trees. They are also rewarding shareholders who have suffered through some bad years since the housing bust, with special dividend and stock buybacks. This is one of the largest timber producers. West Fraser Timber reported net income of $1.49 billion in April, May, and June, an amount the company has historically needed years to earn. The results were boosted by its first quarter owning panel maker Norbord. The February acquisition made North America's largest lumber producer, also its biggest manufacturer of oriented strand board, OSB, which we all know went through the roof during the pandemic, which it still is. And oh, by the way, I got to go find the quote, and I will put it in there if I can find it. The CEO of Home Depot says he will not be lowering his prices on lumber. He'd rather give it away or donate it. Could you say greed? I think so. Let me see if there's anything else in this. I haven't read this. It just popped up, so sorry, guys. Mill executives don't expect a repeat of the spring windfall, but they say wood prices could rise again given the wildfires that have prompted West Fraser and Canfor to curtail output in the British Columbia, the potential for rebound in the overheated do-it-yourself market, and the strong market for new homes. So there you go. There's a possibility that we could see a rebound. I think we're going to see a rebound no matter what. I think we're going to settle in the 700s, give or take a few bucks, and sit there for a while, and then things will rebound and drop back down. And I say we stay in the 5s or 6s. Just an educated guess. I'm just telling you my personal opinion. I'm not a stock market professional, nor am I a professional advisor. I'm just an average guy giving you my opinion. Orders from retailers like Home Depot and Lowe's dried up when prices got too high and Americans resumed spending on travel and entertainment. Well, holy smokes. Coming back to roost them, huh? But home improvement centers have resumed purchasing since prices have declined, says Eric Kremers, Potluck Deltec. I've never heard of it, chief executive. Nobody wanted to get caught up with a lot of $1,600 lumber on the balance sheet, he said. I think that's about it on that topic. All right, guys. That's all I wanted to hit this week. I hope you guys enjoyed it. Have a great Friday. Have a great weekend. I'll see you guys on the other side.